I'm Dan Fitzpatrick at StockMarketMentor.com, and it is Wednesday, February 3rd. Look, every day we see all kinds of stocks on TV, commentators talking about what they're doing, what they've done, what they're going to do, and this and that and the other thing. So here's what I'm doing. I'm going to give you the rest of the story. I'm going to give you the stuff that matters on these three stocks that I saw on TV. Today we're going to be looking at Chipotle, YHOO, and Tesla. Okay, Chipotle reported earnings after the bell yesterday. Stock was down, and it performed. Okay, here's the E. coli, the E. coli symbol here. It's like almost the perfect cross. Okay, the bottom line is this: the stock has been in a downtrend forever. The company reported, I think it was like 14 or 17% decline in sales, but their margins were way worse than that. And think about it. The reason is because, you got a 14 or a 17% decline in traffic. You're not going to have a 14 or a 17% decline in margins. Your costs are fixed. So your revenue goes down, your margins are going to get crushed. The bottom line is this: I think this stock is done going down. This was a big, massive crescendo climax low right here. Today, the stock traded lower. It's like a dragonfly doji, where basically what happened is the beast ate its own tail. The stock trades down right away, and then ultimately buyers start coming in, like chewing through the decline here. So at the end of the day, the stock basically closed just about near the high of the day. Here's my suggestion. Ignore the news on this stock from now on. Anything's a speculation. This thing could go to 46. Okay, we don't know this. But I'm telling you this. When you're looking at the weekly chart, this is a major decline, a major reversal. The stock is holding well above this low. I think your risk on this stock is in not owning the stock as opposed to owning it. As always, have some kind of a stop loss in somewhere. I would suggest just maybe below 430. Simply as a function of risk management, be about 6%. So that's my deal on Chipotle. Now, YHOO. Okay. Company reported earnings, and as most people imagined, they sucked. Marissa Mayer was on CNBC this morning. I also saw her on Bloomberg. Frankly, if she wasn't getting paid hundreds of millions of dollars for failing, I'd probably feel sorry for her. But man, she looked tired. She looked beat up. She was blinking more than Nancy Pelosi at the State of the Union address. Just not a good showing at all. Here's the thing with YHOO. There's no way I would buy this stock. The only way I would buy this stock is if I was managing somebody's money who I didn't like very much. Then I'd go ahead and have them pile into it. I'm tempted to short the stock, but here's the problem. This company, they kind of gave every indication. Look, Marissa Mayer, God love her, and what a great cover shot on Vogue with the stiletto heels. But, she's into buying and selling stuff for a lot of money, whether it's Alibaba, remember, Spinco, and then Tumblr, et cetera, et cetera. So don't be surprised. I wouldn't be surprised if this company was snapped up by somebody else. The reason I'm saying that is because to short this stock just because you don't like management or something, that was what you wanted to do back here, or maybe even here. Now, I think frankly this is just a stock that you want to stay away from on a very kind of a long macro basis. This is a head and shoulder pattern. Let me show you the pattern here. I'm so glad I get to do these videos for myself as opposed to like another internet outlet where I have to watch time. Now I can just meander and muse and do whatever I want to do. The bottom line is this. This was the trend. Okay, we get a high. What I'm describing is a head and shoulder reversal pattern. We get a high here, a little pullback, a higher high. Yay, trend is good. Now we get a lower low relative to this one. Now we got a lower high. This is where the head and shoulder pattern is being put in. This is literally right here, right now. So if it wasn't for the potential for this company to be sold, or by the way, for them to ditch their CEO and get somebody else who kind of knows what they're doing and has a vision for the company. If it wasn't for that, I would say this is really kind of a perfect shorting opportunity. Any rally up here would be fine. Any pullback down here and then a throwback to this neckline here would be fine. You could do that. I would just suggest this. Just stay away from the stock, because it's definitely risky to be short the stock, and it's also pretty risky to be long. Okay, Tesla is not TSS. Okay, why is this stock down so much? Well, first of all, growth stocks are really not in vogue right now. This stock looks like it's going, here, I'll pick a price target, 120. That's my price target. You heard it here first. Why? Because that's about where the stock bottomed here. That would be like a complete reversal. Analysts are starting to look at this thinking basically that the sales are not really going to translate into the types of earnings estimates that folks have for this company. In other words, expectations are lofty. Now suddenly reality's starting to set in, and so that's why the company's selling off. Look, the stock's always been expensive, and I would rather be short this stock than long it. I absolutely wouldn't be long the stock. But a member at Stock Market Mentor asked me today, hey, what do you think about shorting Tesla, buying puts, or this or that? And my suggestion was, look, this thing looks like it's going to zero, or at least 120, but it is so oversold that you kind of want to wait for some type of a bounce in order to take any action on the stock. Now, the company reports earnings. I think it's on February 10th or 11th. You need to check that date. But this is one where, I mean, frankly, if it keeps going down into earnings, you'd almost think the path of least resistance would be higher. What I'm telling you right now on this, and this is the rest of the story, ultimately, I think this puppy has a 120 price tag on it. But between where it is now and where I think it's going to be, there's going to be a whole lot of shaking going on. So just get used to the volatility. Wait for any rally before you shorted the stock. And frankly, because of, and this is just a technical condition, a technical setup. The stock is down almost 12% in 2 trading days, from this close on Monday. This is almost due for a snapback, for just a short-term snapback rally. So for a trade, watch for an upside move. I will say above today's close of 173.48, 73.50, I'll say if the stock starts trading above 174, hey, take this thing for a ride north and then ultimately look to sell into it. Okay? All right, listen, that's it for this video. I hope these 3 stocks I saw on TV videos are helpful. If they are, let your friends know about them. All right, Dan Fitzpatrick, Stock Market Mentor. I'll see you next time.